Welcome back. You've tuned into Business Lunch on CNBC-TV18, and let's talk about earnings because we do have Gokaldas that reported their numbers as well. Overall revenue saw growth. Margins also saw a slight bit of an improvement on a year-on-year basis. But what else are we watching out for in terms of numbers? To talk about the numbers, we have Siva Ganapathi, the Vice Chairman at Gokaldas Exports, joining in with us this afternoon. Thank you so much, Mr. Ganapathi, for joining in with us. And I want to start by talking about the demand trends that one is seeing. Because in the global market, and specifically US, which accounts for around 80% of your revenues, more than that, that has seen a bit of a subduedness, at least what we're seeing in terms of the imports that are there from the US market. How is it shaping up for you? What are the current demand trends that you could highlight over there?
Thank you for having me. The US retail demand has been pretty strong. Even for the YTD this year, for the calendar year, the retail demand has grown by 3%, over a 3% growth the year before. So the consumer pull is there. Last year, the retailers were having excess inventory from the year before, and that is why there was a sharp fall in demand from large retailers for manufacturers like us. However, most of those inventories have come down with the brands, and now they're back in the market. So we're seeing, especially from July onwards, we are seeing a fair amount of traction coming back at an overall market level. Gokaldas Exports in particular, we have started seeing a demand flow coming a bit sooner because of several other macroeconomic factors going in our favor as well. So we are seeing a fairly good demand traction based, backed up by low demand in the previous year, backed up by, the need to move away from China, which has acquired a renewed sense of urgency now with the US elections, plus issues in Bangladesh and all other competing countries in the neighborhood. So in general, the demand scene is looking good from H2 onwards, and I think that will stay that way for some time.
Okay, so demand is looking good. Mr. Ganapathi, thank you so much for patiently waiting by and joining us on a day where we complete 25 years as well. So thank you for being a part of the journey with CNBC-TV18 as well, and for your insights as always. So now that you're saying second half will be better than first half, can you give us some details in terms of what's happening on the freight side? Because a lot of companies who are big exporters have spoken about how maybe now freight rates would come down, and there has been that currency depreciation issue as well for you. Do you think margins will improve and you will be able to do what you did last year, maybe better than that?
So first of all, congratulations on your 25 years. That's an immense achievement. As far as the freight is concerned, we sell almost all our products on an FOB basis. So on an outgoing freight perspective, we don't bear the cost, the customers bear the cost. However, for the amount of goods that we import, raw material that we import, our freight costs have impacted it slightly, but most of it is passed through for us, so we pass it back on to the customers. But there has also been delays in securing some of those raw materials, because apart from costs going up, there have been tremendous amount of delays. So excess inventory in the high seas, delays in arrival, meaning and hence delay in loading it in our factories, etc. All of those are causing some amount of disruption, but we are handling it. But I don't see freight as a big problem because bulk of the freight, which is the finished goods freight, is all borne by the customers. As far as currency goes, our currency has been fairly flat with US dollars for the last 1.5 to 2 years. So, while some of the competing countries have seen a little drop in their currencies, like Bangladesh, even yuan. So we do have some of those challenges, but we have been, fairly able to combat it by higher productivity. Some of our factories are in Kenya. 4 of our 30 factories are in Kenya. And there we saw the Kenyan shilling actually go up sharply against US dollars. So to that extent, we did have some challenges in Q1 and Q2, particularly in Q2, because of sharp rise in local currencies. So for an exporter, when the domestic currency goes up, our cost of operations go up in US dollar terms. But we have fairly managed all of those currency volatility. We, at least for bulk of our operations, we hedge our currency, so we don't take any currency risks.
Okay. All right, Mr. Ganapathi, short on time today, but a pleasure speaking with you. Thank you so much for joining in and giving us a sense of what the earnings look like and the outlook going forward as well. With that, we'll take your leave on this edition of Business Lunch. Thank you for watching. Stay tuned to CNBC-TV18 for more news and updates.